Well, in terms of the U.S. economy, there are signs of a slowdown here. Last week's jobless claims in the U.S. saw the highest increase in over 4 months and likely spiked, perhaps, due to some of the extreme weather in many parts of the country. It's important to note, too, the numbers don't yet reflect the government layoffs coming from the Trump administration. GDP, meantime, has grown as expected, increasing 2.3% year over year last quarter. That is down from 3.1% over the summer. Julia Pollak is the chief economist at ZipRecruiter, and she joins me now. Julia, good to have us. So when we look at this latest jobs report, as I noted, it's important to take into account this does not reflect these DOGE-related layoffs and cuts for federal workers. So to that end, what are you bracing for?
Yes, so this number, the jobless claims number, was higher than expected this morning, and that doesn't even reflect the layoffs that have taken place in the federal government yet, or the spending cuts that have had a ripple effect through government contractors and other businesses. What's going on here, I think, is that we've seen a slowdown in investment. The decline in investment in today's GDP report was actually revised lower. So it's not just negative 2.2%, but negative 3.3%. And we know that that happens when there's uncertainty in the air. It acts as a drag on investment and spending and hiring as businesses wait for more clarity.
And in terms of that acting as a drag, that uncertainty acting as a drag, what are you seeing at ZipRecruiter, for example, when it comes to both hiring and job seekers?
So hiring has slowed over the past 2 years and is about at the 2013 to 2014 rate now. It is much faster than normal and much faster than it was before the pandemic in one sector only, and that is healthcare. It is also unusually fast in local government, so that's for police officers and school teachers. But outside of those two sectors, it is very slow indeed. Tech has been losing jobs for 2 years now.
What are you going to be watching then in the months ahead? Because we're not only watching these numbers, right, as they come in, we're going to be watching these weekly jobless claims. It's almost as if I was having this conversation with a producer earlier. We watched the jobless numbers so closely during COVID, right, as they were going down, but then also as they began to come back up. How important are those numbers going to be now as a barometer?
They will be very important. I mean, many of the federal workers who've been laid off will be on severance, and they will be on payrolls for several more months. And they will likely find new jobs before their official termination dates. So hopefully we won't see a big bump in the unemployment rate at all. But it waits to be seen. Watching the unemployment rate will be very important to see how it's affecting the rest of the economy and how tight the labor market is overall.
There's also, when we look at things from a local perspective, we're so focused on a lot of federal workers. The reality is most of those federal jobs are, of course, not located in Washington, D.C. The mayor of Kansas City was actually on this program earlier this week talking about the 30,000 federal workers in that city and concerns about their jobs. If even a quarter of those jobs are cut, the ripple effect on the local economy could be massive.
Right, so there's no single U.S. labor market. There are millions of what we call OCLOCs, occupation location specific markets. And federal workers are disproportionately concentrated in a couple of locations. They make up 6% of the workforce almost in the DMV area, in the D.C., Maryland, Virginia area. And they are also concentrated by role type in administration, project management, and IT. So in those areas, we do expect that there will be an oversupply of talent and that workers will struggle to find new jobs. They may need to pivot, switch out, move to a different city. It'll be pretty tough.
Yeah, there's also the issue of consumer confidence. We know consumer confidence is falling. There is a lot of uncertainty in that realm as well. People don't know what's going to happen, for example, with these tariffs potentially on Tuesday. How concerned are you about the impact on GDP in the months to come?
Well, what's very interesting about the sentiment surveys is that over the past few years, Americans have started to look at the economy more than ever before through red or blue tinted glasses. And so if you break it down by sort of political party, you actually see a huge increase in confidence among Trump supporters and a decline among people with the opposing view. And it's unclear what will happen in the aggregate. There are many employers who are very worried about the policy, the nature and timing of various policies that could come down the pike. There are others that are euphoric and expect looser regulation and fewer investigations and a lower cost of doing business. So it's a very mixed bag.
Yeah, it certainly is. We'll be watching all of it. Julia, really appreciate you joining us this afternoon. Thank you.
Thank you.